right, guys, you're going to have to forgive me for this really poor quality video. Everything has just broken down, but I want to get this update out to you because I have a lot to tell you and I'm extremely jet lagged and it's very annoying, but I'm here anyway. So if you appreciate that, smash the like button. I recorded this entire video and then realized that it didn't record. I started again and then my screen wouldn't share. So my software is not working. This is being recorded on Zoom. That's why it's not going to be the greatest quality, but the information is going to be gold. So stick with me while we go through that. I didn't get to look at the charts much last week whilst I was traveling. So what I wanted to do in this video was basically go through everything with you guys, talk about some news, what is kind of the sentiment going around about town right now, and see if that sentiment is stacking up on the charts. So this might be a quick fire one because I had the most detailed video for you. And then once I finished, I realized it just didn't save anything. And that is so annoying. So if you appreciate me here showing up in my frustration, smash that like button and let's get into it. I'm going to be honest, some of the headlines that I'm reading are a bit of a buzzkill, but as always, the price action shows the story of what's really going on. So we're going to focus on that today. First up, we've got some words of wisdom from Willy Woo. He's saying that Bitcoin could be heading in for a weeks and weeks long correction. He's saying here that Bitcoin has until Monday to rally, or you're going to print a bearish divergence on the weekly charts and then we'll be bored for weeks and weeks. So don't get me wrong, he still thinks that Bitcoin is strong, but he's saying the bearish divergence on the RSI, if it plays out, we could be bored whilst the Bitcoin pulls back first. Because he says here, our Bitcoin vector framework remains strong despite the pullback. What is happening is technical resistance in the form of a bearish divergence playing out against strong fundamentals. Basically, BTC ran up faster than normal and it's now equalizing. And then you've got this Finbold article here. They're basically saying to prepare for a red week if the 100K level breaks. It's a bit dramatic, but here's the part that stood out. This analysis shows that the 100 to 103 range now serves as Bitcoin's key support. If this fails, traders should brace for a red week followed by sideways consolidation before any meaningful recovery. So yeah, the 100K level, it's a big number. That's where people are usually pretty emotional. It's a round number. We'll see how that plays out in the charts in a sec. But there's also this article here, which is talking about the MVRV, and they're saying that it's not backing the price action. So if you're not familiar, MVRV is a metric that shows whether Bitcoin's overvalued compared to its historical average. Usually when Bitcoin hits new highs, MVRV kind of goes nuts, but this time it's kind of just chilling. Now, the problem here is that they're saying that the ratio is not confirming the rally. Instead of rising with the new price peak, the ratio is falling, signaling a potential divergence similar to what happened in 2021. Back then, price made a higher high, but the MVRV failed to follow, foreshadowing the start of a prolonged bear market. And so with that in mind, I think one of the main messages that I was trying to get across in my good video was that if you are a person who was hoping to take profit this cycle, I personally think that where Bitcoin is sitting right now is a really good spot to take something off the table. Now, that's not going to apply to everyone. Some people are multi-cycle holders or they don't ever sell their Bitcoin. It's personal choice, and I'm not sending this message to everyone. But if you are someone who wants to take profits, Bitcoin sitting at around 104K for an entire weekend is a really good spot for you to do that. And I think it's a blessing, honestly. Just take something off the table. You know, you can't go broke taking profits, as they say, because the data is basically saying, okay, yeah, cool, the price is up, but not so fast. Maybe this rally isn't as strong as it looks. So I just think it's better to be safe than sorry on that one, because what we've got right now is both bullish and bearish signals at play. And that means that it's basically a critical moment for investors. Whilst the price momentum was looking strong, there's a lack of on-chain support, and that makes it pretty fragile beneath the surface. So with that in mind, let's go and have a look at the Bitcoin price action. Now I'm going to go through this so fast because, like I said, I've done it all before, but nobody heard it except the walls in my house. So the main thing here is that we've got a monthly close now, right? And this is the candle here that just closed. We've got a large wick to the top. When we have a look at prior monthly closes where we had large wicks to the top, we did follow through with a pullback on the monthly time frame. So it is possible that that is what's going to come for this month. When we go down to the weekly time frame, it's kind of a little bit Well, I don't know what it is. It's positive, but it's also not positive. So number one, I'll tell you what's not positive about it is if you follow the method that we trade on this channel, then we talk about 3 rises and 3 drops. So ever since the bear market bottom down here at like 15.5, this through here was rise 1 and the retrace, okay? Then from there, the price held the 50 EMA, which is good. It's showing that the 50 EMA on the weekly time frame is a good level of support. Then we broke up into the level 2, went into this multi-month consolidation that was very annoying. But you can see here that we also held the 50 EMA for a long period of time on the weekly time frame. Good. Now, then we rose again and we had the pullback this time again back to the weekly time frame 50 EMA. So when you look at this, you go, okay, the weekly time frame 50 EMA is the level of support. Once we break that, that's the bear market. Okay, great. But also it's the support until it's not. So waiting for price to retrace all the way back, which is like at around 83K, and then hoping that the cycle would continue, I don't think that's a good strategy when you can count that there are 3 rises. So what we're at risk of now, and I'm not saying that this is definitely happening, but what we're at risk of is a cycle repeat right now of what happened last cycle. So pay attention, right? We had this first peak and then recently last week or 2, we broke that peak only with a wick. Now let's go back and have a look at the last cycle high. Same thing, right? We came up, we had the peak, then we broke it basically only with wicks, and that was the beginning of the bear market. I'm not saying we're at the beginning of the bear market. What I'm telling you is don't try to guess it either way, because there are signals there, and all it's really telling you is that this is a good level to take profit. Let's talk about another similarity. When you have a look at this last rise that happened through here in this cycle, you can see that it's supported with green vectors. We also had that in this rise, and we had it in the initial rise too. In the current rise, we don't have any vectors, okay? So this rise has happened on low volume. Let's go and have a look at the last cycle. See here, we had this rise supported with volume with all of these vectors. Then we had this deep pullback. So granted, we haven't had a deep pullback like this cycle, but we know why, because we've got a lot more institutional money and probably not going to pull back as hard as we have in the past. But even with that pullback, it also held the 50 EMA as the support. And then we went for the final basically fake rally, and look, there was no volume on that rally. So look here, volume on the first rally, pullback, no volume on the second rally. Look now, volume on the first rally, pullback, no volume on the second rally. So whether that turns out to repeat, we don't know, but it's just another reason why I'm saying that this price, if you are a person that wants to cash out this cycle, this area is a good spot to take something, at least something off the table. I don't think you'll regret it. Okay, now let's go down to the daily time frame. And because I've already filmed this video, everything that I had to tell you has now been wiped off the chart because I've reset in the video, which is so annoying. But basically, price is at the level that I signaled to you last Sunday when I was giving you levels. Look, you can see it in this YouTube video right here. So I had 2 levels that I thought price would come back to. What ended up happening was we moved up before down, but we did end up coming down for these levels. The first one was here at around 106K. I'll show you how they played out on a smaller time frame in a second. And the second one is here at where the price is now, basically 103, 104 level. So that's right here. Okay, now that that liquidity has been wiped out, we get to reset, okay? And so we want to see basically if there's more liquidity below that they're going to come for, or is it all wiped out and we should head up now? So I'll get into that in a sec, but one thing I want to show you on the daily time frame is that when we use the volume profile range tool, we can also see, I'm trying to get through this fast with it so that I can do minimal editing. So there will be mistakes in this video. Just know, to me right now, it's more important that I get this information to you than I do a perfectly edited and filmed video. So if you like that, smash that like button. So here we can see that the point of control is basically where price is right now. So this is a very critical zone. It was the liquidity that we had prior as my warning. That's been taken. We're at the point of control. We're also at the, there's a 4-hour vector right here. So yeah, this is a very critical area where price is right now. Could we come down further into this liquidity zone? Yeah, and I also wouldn't worry, because that is going to be around the daily time frame 50 EMA, and it's going to be also around the halfway mark of this vector. So if we were to continue to correct from here until, let's say, $1,000 either side of 100K, I still wouldn't worry, but I'm also looking in this current zone for evidence that the final damage that they want to do for now is done before we head up further. But I also think it's a very high risk to expect that we're definitely going up because of all of the other stuff that I just showed you in those articles. Okay, so it's a good time to lock in profits. It's a good time to be cautious, but also cautiously optimistic is the moral of the story. And if we do break down, we're looking around the 100K region next. Now, before I go on, quick shout out to Bitunix. If you are looking for someone to trade on, this is a non-KYC exchange. Don't need to do the passport, the selfie, the whole waiting for approval rubbish that you have to do on other KYC exchanges. You should be able to access Bitunix no matter where you are in the world. They have spot trading as well as futures. They have earn program as well if you're interested in that. And the thing that I love about Bitunix is it's got really good liquidity, which, believe it or not, a lot of crypto exchanges are struggling with liquidity lately, but their platform here is really easy to trade on and your trades get filled, which is the most important thing. Now, by using the exclusive link in the description of this video to join Bitunix, you'll lock in a 20% trading fee rebate on all of your trades for life. Anyway, the link's down below if you want to check them out. Guys, I'm speaking so fast, I bet you don't even need 2x speed for this video. Now, let's talk about a little bit of hopium before I move on, because that was all a bit dramatic and sad. Dan Crypto here says, not much to see here, just your average weekend as expected. He's talking about the current weekend price action. We've started a new month, so I'm expecting some volatility next week as traders and investors rebalance and start betting on what they expect the markets to do during summer. You're kind of no kidding, right? It feels like every month we're just strapping in for the next round of madness, but know that it is the first week of trading for the month. So if things feel uncertain to you or you can't really make sense of price action, just know that what's going on, it's the timing, it's not you, it's not your strategy, just a little bit of patience and price will eventually become clearer. Now, this also caught my eye over here. This article is saying that 202 million in long liquidations happened for Bitcoin alone, I think just over the weekend, which, yeah, sounds rough, but sometimes that's exactly what the market needs. It needs to flush the system, shake out the weak hands and clear the path for something more stable. It says down here that while investors who suffered this liquidation may feel hard done by the market, these mass liquidations could be positive for the flagship cryptocurrency, a healthy reset for what is starting to feel like an overheated market. By removing excess leverage, the Bitcoin market can reestablish a more stable foundation for price discovery and a continued uptrend. So now that we know that that leverage is washed out, though, the question becomes, will alts reset now? And where is the biggest trading opportunity of the week going to be? So let's go and have a look at the dominance and totals for that. So number one, when I look at the Bitcoin dominance, I haven't touched any of these charts since my last update. So we are looking at what has happened since my last update. And what we can see here is that the Bitcoin dominance is entering my area of interest. That area of interest is marked because of this red vector here. And so we're looking at around the halfway zone of that, where this dotted line is. And we're looking for weakness there if we want to see the Bitcoin dominance break down. Now, I personally don't really care because most of my portfolio is in Bitcoin. So as long as that dominance keeps rising and the price keeps rising, it's fine by me. But I understand that most people want alt season and skipped buying Bitcoin because that's sadly what you're trained to do on other channels. And as a result, they're relying on alt season to make some money. So if you're that person, you are wanting to start looking for weakness in the Bitcoin dominance here over the next week or so. And we want to see a lower high get formed, ideally under the halfway mark of the vector. And once it's formed and confirmed, you would then assume that the money is going to shift to altcoins next. If we break through that area of interest, then we're looking at the next target up here, which is between about 68% to say 71%. And that's a very, very key area on the weekly. If we zoom out, you can see prior 70% levels here have been very, very significant. So it's pretty critical. Like all of these things are in their critical zones to watch what happens next. When we have a look at the stablecoin dominance, what we've got here is currently rejections under the EMAs, which is good. We want to make sure it doesn't cross back above. If it crosses back above, something has happened that has made people believe that they need to shift out of highly volatile things and be a little bit more safe. And so they're shifting into stables just to kind of park their money for now so that they don't suffer losses. So whilst we're under it, it's good. We've got wicks to the upsides of these candles, which is showing weakness. That's good. We just want to make sure over the next week that we actually do get the rejection and continue further downside. If we start to cross above it, that's when we have to worry and would expect probably a deeper pullback is coming. Moving on to the totals. So the totals is minus Bitcoin, and I've also minus stable coins from this totals here. Last week, I spoke to you about the totals being giving us an M formation, but it could also be consolidating. The M formation has now played out, as in it's broken down into my prior area of interest. And currently these two candles are giving us wicks at the 50 EMA, which is a good sign so far. We want to see that continue. So what we're looking for now that we're in the zone is daily candle closes that look bullish. Wicks to the bottom, bullish engulfing. What else are there? Railroad track and star formations. That kind of thing is going to give us confidence that, okay, this is the support and now it's going to head up for the next level. It can come a bit lower before it does that. So it could come down, into this sort of where the halfway mark is at about 895 it is on my chart. So that's okay, but just anywhere within this box is where you're looking for those final candles to show you some buying momentum coming back in. Okay, so now that we know that, that means we have to go and have a look at ETHBTC, because that's going to give us a heads up on what's going on with alts. And with ETHBTC, we're still in the same zone of decision time. Well, it's not even decision time, it's just consolidating. So we can see that we've spiked into my area of interest once. We haven't returned there yet. Currently, the price is holding the 20 EMA, which is positive. However, when you zoom out on ETHBTC, you will also see that where the price is right now, it is a third touch of the downward sloping trend line. A third touch to a trend line confirms the trend, and that means that the trend is a downtrend. So that's not positive. So we're looking now for signs of a change in structure, and that may be coming. The 20 EMA is potentially one, but we could come down to the 50. I wouldn't mind that. Actually, I'd prefer it, because it would be a second touch to this sort of support area that shows, okay, that is definitely the support of ETHBTC now. And if it did that and then again gave us the same bullish candlestick confirmations, we would expect it's going to break out next. So it's critical to watch this, even if you don't want to trade ETHBTC. I still think that ETHBTC sort of gives you the signal for alt season along with the dominances and totals. So it's definitely worth charting regardless. And then we also need to have a look at the stock market. So let's have a look at, well, we'll look at NASDAQ, seeing as it's on here. It's a bit backwards, but what we can see here is the perfect example of what I was talking about when vectors return to the 50% mark. So this was the vector candle here. This dotted line is the halfway mark of that vector candle. And you can see here that this candle right here spiked into the zone, rejected just under us, and gave us a very large wick. Now that's perfect. That is where you would normally actually take a short position, but the target is just the 50 EMA. So I'm not saying to take a short position on NASDAQ. I'm just saying that this is a textbook setup and what you're looking for when price returns to unrecovered vectors. So that's not going to be good. That if that plays out, as in the downtrend starts now on the NASDAQ, that's going to give us a hint that crypto is probably going to pull back a little bit deeper than where it is right now. And we just need to be prepared for that. That's all. And then we wait and see what happens at the 50 EMA. The S&P is consolidating, however, in the area of interest. So really, you've just got to wait for it to make its mind up. Ideally, we want to see it break out and continue to the upside. That's going to be good for crypto to continue moving to the upside. But if it breaks down, then again, we're watching the 50 EMA. If it starts to break down and it actually breaks below the 50 EMA, we sort of have to get really, really cautious. But if it breaks down out of this area of interest and holds the 50 EMA as support, then it might be okay and it might not be too dramatic, and we'll just have to reassess once it gets there. All right, so with all of that in mind, that means we can now go back to Bitcoin and have a look at smaller timeframes and what has happened over this weekend. So first of all, as I said to you, these were the areas from the last video. This area right here is where Bitcoin had a small consolidation, was right here. Okay, and then it took out all of that liquidity, and then it went into the next zone, which was down here. And that's basically where it is now, which is right here. So I have already taken some longs, and I want to film this so fast because I want to open some more longs. But basically, when we mark out the weekend trap, it's possible that this was the trap here, the spike low. Now, it's absent of the kind of candles that we look for at the spike low to confirm trap traders, but it happened on a weekend. Now, just know that the false move week beginning can happen anytime, Sunday, Monday. I mean, it's rare that it happens on a Saturday, but it's possible. It can also happen Tuesday, right? So it happens when it happens, but generally we see it Sunday, Monday. But it's possible that it happened. The reason that I say that is because when I zoom out on this, I can see that from last weekend, we had the move out to the upside. So this was last weekend's weekend trap right here. Okay. And then we moved out. We had basically a double fake move to the upside. Again, I was on an airplane for this, so I didn't see any of this. But now when I look at it, I can see that I have a drop through here, I have a drop through here, and I have another one through here. And it's possible that this was the final damage and we're now going to change structure. So I personally have taken a chance on some longs. The caution was that over here, we were still holding the 50 EMA as resistance, but it does look like it wants to break it now. And so if it gets back above the weekend trap and then gives us another high low, I'll be a little bit more confident that we're going to break the structure there. But for now, it's a risky long that I've taken, but I'm okay to do that because I shorted here. And so my short position is still currently open. And I'm just opening a long position against that to then decide, you know, are we continuing to the upside or the downside? The other thing that I consider is the liquidity. Now, I've just marked on this chart liquidity levels that are highest, the highest amount of money above and below price. When I look below price, so like I was saying earlier, you have to check once liquidity is wiped out, you have to make sure that there isn't more liquidity below in the same direction that the final damage is actually done. So when I look below the current price, the liquidity levels are sitting in the low 100 millions, right? When I have a look above price, we're sitting in the high 100 millions to the 200, almost nearly 300 millions, right? So that means that the market maker's best interest is to move price now to the upside to start taking out those shorts that either don't close or people who just are bearish even against the trend and just keep trying to short this. So because I can see that, because I think the market maker's best interest is to now move price up, I've taken those risky long positions and that's my story and I'm sticking to it. Okay. Now, if you're wanting to understand all of this stuff, how the liquidity works, how the levels work and all that sort of stuff, then consider joining us over at Trade Travel Chill. This is going to help you really step up your trading. You can understand the charts properly. You can get access to my full system, weekly setups, hang out with the community that actually knows what they're doing. And know that in our memberships, we've got daily market updates, live streams. The whole strategy is mapped out in our highly detailed courses. All the details are on the website and you'll find the link in the description of this video. Now, let's talk about some macro stuff that could shake out the market this week. You need to keep these events on your radar. On Monday, 10 a.m. New York, we have ISM manufacturing PMI. It's soft data, but it can still move things. Then at 1 p.m., we have Powell speaking. That's always a wild card. Tuesday, we have JOLTS job openings. And then what else have we got? That's it for Tuesday. On Wednesday, we've got ADP, non-farm employment change, and ISM services PMI. Now that ISM services PMI, that is the biggie of the week. So that could turn out to be the midweek reversal. It's big because 70% of the US economy is services. On a Thursday, as usual, we have the weekly unemployment claims and we also have the ECB interest rate decision. There is an expected 25 basis point cut. Then finally on Friday, we have non-farm payrolls. That's the one that everyone is watching. But then crypto specific, we have the Genius Act vote, which it can drop anytime within the next 2 weeks. If it does, we're all hoping that it brings us fireworks. So yeah, anyway, it's a busy week yet again. I'm excited to get back into it now that my travels are out of the way. So yeah, hope you enjoyed that super fast update and I'll see you guys over in the Discord.